Probably not. You can escape if you want, but I'm here. So great to meet everyone. I'm Peter. I'm the CEO of a company called Synctera. And what we do is we help community banks like you start a new part of your business called FinTech banking. So you've probably heard about Chime and Revolut and all the crazy startups launching neobanks for consumers, yeah? And you thought, how can I be a bank behind that? Everyone wants to be the next Sutton Bank with Square as their customer, right? Hundreds of millions in deposits, all that sort of thing. Well, the answer is, if you tried to do it yourself, it would be pretty hard. You'd have to go build a whole tech stack, you'd have to figure out how to work with Marqeta, you'd have to do KYC, you'd have to do everything there is to build a banking tech stack. And then you have to start thinking about compliance. And we all hate/love compliance. Anyone actually love compliance? And they're not in compliance? No, there's no hit rate on the compliance lovery. But that's okay. We need them to make sure the bad actors don't get into the ecosystem. I used to run a payments team called Uber Money, and we had a huge compliance team, 500, almost 1,000 people. And believe it or not, you can do money laundering on Uber. And the classic move was discovering a fun taco restaurant in Paris that was selling $80,000 worth of tacos every day. And it was possibly like a 3 Michelin star taco restaurant. So we sent someone in there to make sure there weren't $5,000 tacos on the menu. There weren't. It was one guy with a little kitchen, and somehow he was selling $80,000 worth of tacos. Turns out, no customer complained because no credit cards were stolen, but there was a lot of money laundering going on. So it can happen to anyone. Compliance matters, and how you think about it as you start your new part of your bank called FinTech banking, that's where it sort of begins. So let's sort of start with the basics. Most of you guys run on some sort of core banking system, the FISs, the Fiservs, the Jack Henrys, or if you're especially lucky, you're running on a modern core banking system called Phoenix. And if you want to keep score, in 1994, I came to this conference and launched Phoenix. So, been there, done that, done the core banking stuff, and let's just sort of generously say it's a bit of a taxation sort of situation on your banks. But here's the cool thing. This powers your retail bank. And you may have maybe some consumer, commercial business, so small business customers, all that sort of stuff. If you're doing really well, you might have a wealth team that sort of helps your high net worth customers potentially. And the bummer is, none of these guys can help you launch a FinTech bank. So imagine you're over here, you're a crazy founder and you're going to start a bank for people that love pets. This is legit, people love pets. Believe it or not, we already have one. It's called Synctera, and they're launching next month. He's an awesome founder. He's done 2 startups before in the pet industry, food, insurance, healthcare. And turns out pet owners are completely and utterly price insensitive. If your dog gets sick, it doesn't matter, you will pay. And on the other side of that trade is someone like Care Credit that gives you a free buy now, pay later type of loan that is sort of not the ideal thing for consumers. Anyway, so imagine your pet bank, and the founder, Robert, he's awesome. He says, I know everything there is to know about pets and nothing to know about banking. Do you think if Robert calls one of you guys at the bank and says, hey, will you be my bank, you'd know what to do? Probably not. So in the middle, you need a platform to start a new part of the bank called FinTech banking. And think about all the things that an average customer does when they walk up to the branch. The first thing you do is a little bit of KYC, right? So he's going to have to do some KYC, check the last 4 of a social, look up the address, make sure I'm not a terrorist, all that sort of stuff. It's the compliance people again. We'll say words like BSA and AML and blah, blah, blah. But you'll have to do some of that. You kind of do this over here. The consumer walks up to the teller or works into the branch, or if you're a modern bank, you have online banking and they do it online. We launched online banking in 1995. And it hasn't changed that much. It's kind of crazy. So anyway, customer comes along, they need to do some KYC. What we do at Synctera is we sit in the middle between this crazy founder over here who wants to do some KYC, then he wants to open an account, and then he wants to do something like fund the account with ACH. And then who wouldn't want a debit card with a picture of your dog or cat on it? Hell yes, debit card. And who doesn't want points back at Petco rewards? We, Synctera, give Rob all the APIs to do KYC, open an account, and we let them open consumer checking accounts, just like personal debit, or, believe it or not, there's Vet Bank. What do you think Vet Bank does? It's a neobank for vet owners. Those are small businesses, so we can also have small business accounts as well. And imagine Pet Bank doing transactions with Vet Bank. Maybe they do woof woof P2P. Anyway, if you were talking to these folks, my team as well, they'd say, oh, we've got APIs for all that crap. All you need to do is deploy APIs and these guys will work with you. Nah, doesn't work. Because what happens is, you're gonna then do a 6 to 9 month project to integrate between us and you. And you guys want to do that like you want to be shot in the head. It's like no bueno. So screw the APIs, we don't like them. And what happens is, over here in Synctera land, we have our own mini core. And the only thing that lives over here at the bank is a giant FBO bank account. Anybody know what an FBO is? Some? Nay? Nay?
No.
This is the interactive part. Raise hands. FBO. For benefit of. It's a giant checking account. And the sum of all of the debit cards rolls up into here. So this is the sigma. So on your core banking system, you get one account. And why that's good? Pet Bank is going to launch with 150,000 customers. We charge you $1 per user per month, right? Just to have the account there. You don't want to do that. Here's what's really cool about Synctera. We offer this storage, and instead of costing you $1, you earn $1. Think about the inversions of the math. These people are, I don't know where they are. I can't even see my alma mater. Did Finastra even show up? I didn't even see. But anyway, these guys charge. We do this strange thing. We pay you. It's called revenue. I don't know if you've heard about this idea. It's a stunning idea. So every time an account gets created, $1 a user a month gets shared between us and you, 50-50. Print a debit card. What do you guys pay for Fiserv and Jack Henry and all those guys? $5? Worse, $10? Give me a number. $10? $5? 5? The cool thing in, these guys pay. It's this revenue thing. I don't know if you remember that before. Plus 5. Amazing. You just made another $5. There's a little bit of cost. They actually cost about $3. So we'll split $2 with you 50-50. And then here's the really cool thing. We also do processing. So every time the card gets swiped, you're going to earn between 30 and 40 bips of interchange of their consumers. So you don't do any account opening, you don't do any account management, you don't have to talk to them, you don't do customer care, you just make $1 a user a month and 30 bips of interchange. At Uber, I ran a bank here called Uber Money. It was like a neobank for drivers. Think of it like USAA. And we were generating a couple of $1 million a month in interchange value just on swipes. And you don't have to do anything. Remember, Ixnay on the Connect Day. These don't get to play. So what does Synctera do? Synctera helps Pet Bank 2, Vet Bank, you name it, payments companies, whatever, build their apps We then bring those opportunities to you as a bank and say, hey, here comes this cool startup. Are you interested in working with them? There's a little bit of price negotiation, so we'll help the fintech get the lowest price from you, and we'll help you get the highest price from them. Think of us as a true marketplace. So there's a marketplace in the middle. And you need 1 or 2 people in compliance and accounting, but we give you all the billing, reconciliation, solve all that complexity as well. So the simple answer is, if you would like free money, you join Synctera as a bank. We'll do all the marketing for you. You don't have to tell the world you exist. We're getting 1 to 2 fintechs a day reaching out. We're signing 2 to 5 a week. We have 9 banks on the program right now. Our most earliest customer is Coastal Community Bank. Some of you guys may have heard of a guy called Eric Sprink, pretty successful. His regular bank over here grows at a pretty good rate, 100, 150 loans a week across a $2.8 billion valuation asset base. His FinTech universe, a couple of 100,000 accounts a week. This is like legit. And so that's Coastal. Do we have any banks in Texas? We do. We just signed Veritex Bank here in Dallas, I think. Big bank, 10 billion. Lots of different sorts of use cases. We have a bank that is particularly excited about cannabis. Not for everybody. But there are a number of fintechs that need to figure out how to do banking for cannabis. Because in some states it's legal. That's Regent Bank, they're great. We've got a couple of banks that are into crypto. If you don't like crypto, that's okay. So what you do as a bank, you tell us what sorts of fintechs you want to work with. We do the sales and marketing, and the onboarding process is 60 to 90 days. The hardest thing for most of you, becoming principal members of MasterCard. And that's it, because you're going to be the issuer. So many of you may use B of A or someone else as your correspondent bank to actually do physical production of cards and issuing through MasterCard, or you maybe have a banker's bank that works with you. Now you'll be a full first-class member of MasterCard. That's it. FinTech banking, a new part of the bank that's a revenue profit center as opposed to a cost center. You get to be cool, hang with all the cool crowd. You can get a cool vest, red shoes, all of the above. And that's it. Got any questions? Yeah. We do all the program management. We run the whole program. So you guys don't have to do anything other than at the end of the day, MasterCard will settle up with you. So there'll be an MC settlement account per fintech. And then in our recon engine, we'll show move money to corresponding balance. So imagine if the fintech says every new customer gets 10 bucks. They pay. They own 100% of the fraud. You still as a bank own AML. So customer's debit card gets stolen, swipe, 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 bad, bad, bad. Customer calls the fintech, fintech makes them whole. And they do that by having a reserve account over here. If you want to, and you've got a good balance sheet, you can offer to support the fintech doing lending, but not all fintechs need that. Some will bring their own balance sheet. Any other questions? Yeah.
We have Visa now. I don't know the answer to this. We have to not take Visa if we can.
If you have Visa today, you can also use MasterCard for this part of the program. You probably can't do it for your own customers, but for this, it's usually fine. So this is effectively turning you into a meta bank, or a green dot, or if you've heard of Bancorp, but much cooler. Those guys are kind of old school.
Who's doing the process?
We do everything.
The payment process?
Yep,
Your
our company. Yeah, we partner with a company called Marqeta, who does processing for lots of folks. Any other questions? Yes, sir.
They oversee the process. What do we need to do in terms of FTEs?
So great question from Dante. The question is, what sort of oversight is required by the bank to monitor and manage the program? So two-part answer. All of fraud and KYC and initial reviews are all done by the fintech. And we support them with a team we call ground control that helps them look at cases, so forth. So we have a fraud tool that flags a bad transaction. We create a case, the fintech looks at it and says, I approve it or I decline it. And they may know something about the customer that you don't know. In the event that we detect AML, we will send a case to you at the bank, and you will have a team of 1 to 2 for I don't know, 3 or 4 programs each, so 2 or 3 folks in compliance that are going to sit there and look at all the transaction volume and identify things that are going wonky, and we'll help you file a SAR if you need to on behalf of the fintech. So at the start, it's 1 to 2 people is a good sort of benchmark. And you'll need 1 person in bookkeeping, accounting to monitor reconciliation at the end of each business day. But we do all of that, it's all integrated. So all the ACH funds flow. We have push to card, so if you want to send money to a debit card or pull from a debit card, ACH and soon wires as well. So we're about 2 years old. We raised $47 million in funding, and we're 20-ish fintechs have signed up. First 10 are going live this quarter. So it's right at the start of the journey for us, which is really fun. No, startup. Spend it. More of these. Need more of you. Our goal will be just grow. We'll do a Series B August to September on about 400, 500 grand a month in revenue. So welcome to FinTech Life. Right now, this is all just US. Our 2 next markets will be Brazil and Mexico. And in those markets, we'll have a different strategy because there's a licensing regime called e-money. And in those markets, we'll actually be the bank because there actually isn't the concept of a community bank in those 2 markets.
Is there a certain size of community bank?
Great question. So the question is like, what size community bank do we want to work with? I think the sweet spot is about 150 to 250 million in assets that is running a relatively stable book and wants to add something net new to it. We've also worked with completely de novo banks that have literally started from scratch with the only intention of being in fintech. If they're above 10 billion, they can't offer Durbin exempt interchange to the consumer fintechs, but they can participate in small business debit. So above 10 billion is a limiter in many ways for the banks to participate.
So with the faster payment scenario that's going to be taking place, it's going to affect interchange, so it's really changed the model if interchange goes away for most things.
So the question is, will faster payments impact this thing? I think in 1999 or 1998, I met for the first time with Nacho on faster payments. So I'm not exactly holding my breath for it to show up on time. But even if it does, consumers will still swipe with their debit cards all the time. You're not going to do a faster payments when you walk into Walmart or Costco or something like that. People will still spend. So what's the stability of these deals? Is that the question? So they tend to be 2-year deals with 1-year auto renews from the fintech's perspective. And as long as you continue to grow with the fintech, all the pricing has scale tiers. So where it starts at $1, it'll get down to like 40 cents to the fintech as they get scale, which you will want to keep participating. So you won't want them to outgrow you, and we give you all the tooling and infrastructure to do that. And we operate everything. So from your perspective, it's sort of fully outsourced. You don't have to worry about that. For some fintechs to get really large, we will help them find a second bank because they'll say, I don't want to have all my eggs in one basket. Just safety. And if you look at Square and you look at PayPal and others, they all have 1 or 2 banks on the back end because who knows what's going to happen with compliance.
So you've got a contract spot for 2 year, 3 year, does the bank still keep the 30 bips on the customers interchange?
Good question. So if at the end of the contract, the fintech moves away, for example, technically they're your customers legally. You probably won't have anything to do with them, and being a good citizen in the ecosystem, you'll be like, hey, new bank, we're not going to be painful and make it hard for you to migrate or move those customers over. So at that end of that period, you would stop earning interchange. The new bank would get them.
Are there any upfront costs?
The only upfront costs are really related to MasterCard getting onboarded with principal membership. There's 10 grand, 20 grand, something like that. There's no cost from us. And we generally charge each of these fintechs 12 grand setup fee, and we split that with you 50-50. And they tend to run now at 5 grand a month minimum, and we'll split that with you 50-50. So our goal for you guys is to make it as frictionless as possible to onboard, so that you actually end up with 10 or 15 fintechs on your bank, because not all of them are going to work. Some are going to fail, and that's okay. And you want to take a portfolio approach of looking and seeing if you get lucky with the next Square. And several will succeed. Yes. That'll be the sort of normal range. How are we doing on time? You trying to kick me out? All right. Nice to meet you all. Have a great day.